A very happy new year to you as you join us on this very first episode of Tax Matters in year 2021. It gladdens our hearts that we all put through 2020, through COVID-19 and all, to witness this new year. Yes, year 2020 was an eventful year. Beyond COVID-19, the year 2020 was an eventful year in many respects. Last episode on this program, we brought you the first in the series of what we have tagged 2020 in Review. Today, we'll bring you the second part of the series. One of the major events of year 2020 in the area of taxation was the renewed emphasis on stamp duty collection. Of course, you know that stamp duty is not a new tax type in Nigeria, neither are the chargeable instruments, no, the applicable rates. However, against the background of the need to shore up government revenue, the federal government, through the FRS, decided to vigorously pursue the collection of stamp duty. On Tuesday, the 30th of June 2020, an interministerial committee on audit and recovery of back year stamp duties was inaugurated. The story of that inauguration was brought to you in our episode 24 of 2020. Now to the main business of the day. Today, we are going to be telling the story of the launching of the Interministerial Committee on Audit and Recovery of Back Year Stamp Duties. On Tuesday, the 30th of June 2020, the FRS played host to various stakeholders in the revenue generation sector at an event where the efforts that the service has been making in the last 4 years were further consolidated with a view to making stamp duty take its rightful place amongst the group of sustainable revenue sources for Nigeria. Chief host, Mr. Muhammad Nami, gave a background to the issue at hand.
Stamp duty, as defined by in Section 2 of the Stamp Duties Act, is an impressed pattern or mark by means of an engraved or ink block die as an adhesive stamp or an electronic stamp or an electronic acknowledgement for denoting any duty or fee. The stamp duty is not a thing of now. Stamp duty is an issue of federation account, and that has been the issue since Ordinance 41 of 1939. Outside that, there were subsequent amendments in 1942, some other amendments in 1947, there are amendments in 1957, then the consolidation, which is now popularly referred to as Stamp Duties Act Cap 6 S8 LFN 2004 as amended. The Finance Act 2 has also put to rest a lot of things, particularly the fact that this is tax payable to federation account. And for that ambiguity to be removed, it substituted the word Federal Government of Nigeria and replace them with Federal Inland Revenue Service.
The major assignment of the Interministerial Committee is the audit and recovery of back year stamp duties collection. Secretary to the Government of the Federation, Boss Mustafa, who stood in for President Muhammadu Buhari, inaugurated the Interministerial Committee on the audit and recovery of back year stamp duty collection from 2015 to 2019.
In the face of dwindling oil revenue and the global shift away from oil-dependent technological products, it is even more compelling now to begin to think out of the box in order to safeguard the future of our country. Therefore, this administration has resolved to widen the revenue base by activating the stamp duty revenue collection, which has been neglected for more than 20 years. There is assurance that the collection from stamp duty will be second to oil revenue, as it has the potential to yield up to ₦1 trillion revenue annually if properly harnessed. This Interministerial Committee on Audit and the Recovery of Stamp Duty Collection is being inaugurated today to serve as a timely intervention in the country's search for ways to augment its revenue generation drive to avoid sliding back to recession. The Interministerial Audit and Recovery Committee, in essence, is therefore expected to judiciously undertake an audit and recover on behalf of government all stamp duties charged from January 2016 to date, but yet to be remitted by the relevant ministries, departments and agencies, money deposit banks, and Nigerian Interbank Settlement System PLC NIPS, amongst others.
In subsequent episodes, Tax Matters brought enlightenment and education to the tax-paying public on the chargeable instruments and the applicable rates of stamp duty. We began this on episode 24. Here is how it went. Two prominent changes introduced by the Finance Act are the increase in the rate of VAT, which took effect on February 1st, 2020, and the amendment to the Stamp Duty Act. And you will agree with us that stamp duty matters are currently trending. Questions are being asked and clarifications are being sought. In response to requests by taxpayers, the Federal Inland Revenue Service has issued a press release on the matter. The press release in our possession begins by reiterating the fact that stamp duty is not new in Nigeria, but rather that the principal act dates back to 1939. The stamp duty legislation has, over the years, undergone several amendments, the most recent being the amendments introduced by the Finance Act 2019. Among other things, the Finance Act now recognizes technology, e-commerce, and cross-border transactions in line with global best practices and current economic realities. Stamp duty is chargeable on both physical and electronic instruments, agreements, contracts, receipts, promissory notes, memorandum of understanding, insurance policies, and other instruments stipulated in the schedule to the Stamp Duty Act. Stamp duty is chargeable in two ways: ad valorem, that is, where duty payable is a percentage on the consideration on an instrument, or flat rate, where a fixed sum is chargeable irrespective of the consideration on the dutiable instrument or document in question. The full list is available on the website of the FRS and on our YouTube channel. The press release goes further to spell out jurisdictions of tax authorities in the administration of stamp duty. For instruments that relate to matters executed between a company and any person, jurisdiction lies with the FRS. The State Internal Revenue Services are in charge of instruments executed between individuals. On episode 28, the X-ray on stamp duty continued.
The principal Stamp Duties Act was enacted in 1939, 80 years ago, in fact 81 years ago. Why did it take so long to decide to give stamp duties its rightful place among the major revenue earners?
Well, a point of correction, I think Stamp Duty Act was not the one, it didn't come on board in 1939. It actually came on board in 1923.
Wow.
And the 1939 Stamp Duty Act was one that repealed that of 1923. Having said that, that same 1939 Act was at different times in 1942, 1945, 1947 and 1953 amended. And this amendment, which we're talking about, was centered at the 1939, which repealed that of 1923 Stamp Duty Act. they were all consolidated at the end of the day in 2004 and called Stamp Duty Act 2004. The attention in actual sense, as a second point of correction, is not being paid to stamp duty for the first time in Nigeria. We have stamp duty commissioners in all 36 states in Nigeria, including FCT. And these stamp duty commissioners, as a result of our collaboration, have been before now, we are housed or being given office to operate in all the corporate affairs commissions wherever they are available in all part of this country. In Lagos, for instance, in addition to the office of CSA office, we have another stamp duty commissioner in Lagos Mainland West and Lagos Mainland East, bringing the total number of stamp duty commissioners in Lagos State to 3. As a result of this, I think we should have as much as 38 stamp duty commissioners in this country.
This kind of nonsense has to end today. Why would the bank be removing somebody's money every time like that?
Mr. John.
My neighbor.
Yes, sir. Why are you rushing to like this?
Can you imagine? I just sent money to my son, and I got a debit alert of 15 naira from my bank as stamp duty. I am going to seek explanation from my bank because I made a transfer, not post a letter.
Mr. John, let me explain what stamp duty is. Stamp duty is not all about postage stamp matters. The 15 naira is a stamp duty levy charged by banks on customers who make transfers of 10,000 naira and above from one bank account to another bank account.
And why should I pay stamp duty for my hard-earned money?
Mr. John, paying stamp duty levy is a civic duty for every patriotic citizen. The taxes we all pay are collected and used by the government to pay salaries and provide basic amenities for citizens. It's even easier to make stamp duty payments now. All you need to do as a taxpayer is to log on to the following: www.stampduty.gov.ng or www.firs.gov.ng and click on e-stamping. By the way, Mr. John, it pays to pay your tax, you know.
Oh, thank you very much.
Sir.
Thank you, my daughter.
You're welcome,
My
sir.
regards to your family.
All right, sir.
This broadcast is powered by FIRS, Federal Inland Revenue Service.
From time to time, Tax Matters went to town to feel the pulse of the tax-paying public.
First of all, the most important thing to me is, first of all, securing the country. Security is very important. If you fix the security issue, then you get investors in. If there is insecurity in a place, there cannot be investors. Do you understand that? If you take Dubai as an example, it's a tourist. It's one of the most toured countries in the world, and it's because there is peace. When there is peace in a country, then you can invest in tourism. Nigeria could be something like that.
Let's be honest. Yes, in Nigeria have 100 times more resources than, let's say, the top economy, Germany. Yes, in Europe. Germany don't have oil, they don't have gold, they don't have nothing. Yes, but they are top economy. If we now united this UAE, 20 years ago, 90% of revenue came from oil. Now 90% comes from tourism. Why? Just because they used oil to raise up country. So I believe the proper way of using natural resources would rise up in Nigeria from the bottom line.
I think we have to focus on tech. Like real focus. The government should, as much as possible, give grants and encourage the youth to go into technology. That's a good source of income for us, as we can see in other developed countries like US. The biggest companies now in the world, they're all technology companies. So aside the agriculture too. We know before the discovery of oil in Nigeria, agriculture was like the major with cocoa. So I think they have to focus on those farmers. Those are the cocoa, the other crops that we can export.
We look at content first, production here. You realize that basically almost everything we are using here, majority of them are being imported. We depend mainly on things we bring in. If we can support local contents here, especially agricultural sector. Then you talk about the information technology, that's the IT. There are a lot of people who are doing programming here, who are producing one thing or the other that benefits the country.
Against all odds, the annual task conference organized by the CITN, which was scheduled to hold in April 2020 but was put on hold due to COVID-19, finally took place from the 4th to the 6th of November 2020. It was a grand event. On our episode 44, we began the sensitization of the tax-paying public on the provisions of the Finance Act 2020, which was forwarded to the National Assembly by President Muhammadu Buhari on the 1st of December 2020. The Finance Bill 2020 makes copious provisions for the amendment of a whopping number of 12 tax legislations in all. After apprising the gathering on the extensive consultations carried out in putting together the Finance Bill, the Minister proceeded to state that the Finance Bill 2020 has been designed to build on the objectives and gains of that of 2019.
The Finance Bill for 2020 seeks to make changes to custom duties and excise, improvements in fiscal and other laws to support annual budgets. This draft bill also seeks to implement fiscal policies in line with multi-year, medium-term frameworks, as well as the fiscal strategy paper, the MTEP-FSP, as well as also support other reforms that government is working on to enhance the ease of doing business.
A major provision in the Finance Bill 2020 is with regard to the relief extended to the poorest of the poor.
As we speak, the beneficiaries of the minimum wage pay taxes. This provision is doing is to exempt people, Nigerians that earn minimum wage from paying personal income tax.
Still on reliefs.
The Finance Act 2019 introduced companies' income tax exemption for small businesses. However, in line with the federal government objective of incentivizing small businesses, there is a need to introduce a similar exemption of the tertiary education tax. The proposal, therefore, is for the Finance Bill 2020 to introduce an amendment to the Tertiary Education Tax Act to exempt small businesses from tertiary education tax.
On minimum tax.
The proposal we are making is to reduce the minimum tax rate from 0.5% to 0.25% of gross turnover for financial years ending January 2021 to 31st of December 2021. So that's just for 12 months. On the Stamp Duties Act, what we are seeking to introduce is to expunge stamp duties on electronic transactions and create a separate framework for taxation of electronic receipts. As part of the gradual evolution of the stamp duties framework, it is recommended that the charge levied on electronic receipts through the commercial banks is separated from the Stamp Duties Act and reintroduced as a separate electronic money transfer levy under the supervision of the Central Bank of Nigeria. It is important to note that the electronic money transfer levy is not intended to be a new levy.
On reliefs for donors to the COVID-19 fund.
The proposed amendment is intended to grant a tax relief to companies that donated to the government's COVID-19 relief fund. Such relief is expected to serve as an acknowledgement of positive taxpayer behavior and encourage such behavior in the case of future existences of such nature.
A robust interactive session followed the presentation of the minister. In attendance at the public hearing was a large delegation of representatives of accounting and tax consulting firms.
The next one is to do with exemption for minimum wage earners. So again, this is a good thing that we said if you earn minimum wage, you don't need to pay personal income tax. And I've said that a lot of times that South Africa is a smaller economy. They have exemption for if you earn up to about 2 million naira equivalent in a year, you don't pay personal income tax. Yet South Africa makes more money from personal income tax than all the taxes we make in Nigeria. All the 36 states, FCT, FRS, custom, combined from personal income tax alone. So it's a good thing. However, what I want to add is that currently in the law as it is, if what you earn in a year is 30,000 naira or less, you don't need to file returns. 30,000 naira or less, when the Personal Income Tax Act was enacted, was about $30,000. So the world has moved on, inflation has come in, exchange rate has devaluated. We should not ask someone who earns 30,000 per annum, not per month, to be filing returns. So I want to propose that we amend the law to allow anyone who earns minimum wage and all the source of income they have is only from employment, not to have to file returns, because the employer would have done the returns for all the employees, so you still have the data. So the next one I have here is to do with the electronic money transfer, which is proposed to be administered by the Central Bank of Nigeria. A couple of issues with that. The first one is, in principle, this law or this proposal will replace the stamp duty that is currently paid on money transfer. So to the person paying, maybe it doesn't make a difference to them. But in terms of the ease of doing business and the ease of paying taxes, this will count against Nigeria. So I'm involved in doing the survey for the World Bank every year. So what's going to happen is, we'll say, is there stamp duties in Nigeria? You say yes. Count 1. Is there a tax on transfer of money? You say yes. It becomes 2 counts. I do not think also that in terms of the principles in the Constitution, where this stamp duty is supposed to be shared to states, asking the CBN to collect it, unless it's going to be shared to the state, will be depriving the state of their rightful revenue. And that, in my view, is against the whole principle of fiscal federalism, where we are even saying let's put more powers and resources into the hands of states. And lastly, about that point is issues to do with multiplicity of audit. What is then going to happen is that the CBN that has no role in tax matters is being asked to administer tax issues. They also have to do tax audit. And this will add to the existing problems we have, where different agencies of government are doing tax audits. I do not think that this is appropriate. I think whenever there's a need to do an audit, we ask the tax auditors, which is the FRS at the federal level or State Internal Revenue Service, to do those audits. That way we can have more sanity and reduce the cost of doing business. So my last point is going to be on the company's income tax rate. We have done what is right, in my view, for small companies as well as for medium-sized companies. We have not done anything for large companies, and it is not a crime to be large. As of today, you pay 30% CIT rate in Nigeria if you're a large company. You pay 2% education tax, that's 32. On the profit that is left, you pay withholding tax of 10% when you distribute it. Effectively, the taxes you pay on the profit that goes to shareholder is about 40%. And I did my analysis all over the world, and this places Nigeria as one of the top 10 countries in the world with the highest effective income tax rate for companies. There must be reasons why even large and small countries like the US, like the UK, are reducing their tax rates. I know that Nigeria does not have money now, but I think we can signal something, and that could be to reduce the CIT rate from about 30 to even 29%. And I've done my math to say what's the impact of what I'm proposing. So FRS collects about 1.3 trillion from CIT. 1% of it is 13 billion. 13 billion is the cost. I think the benefit will far outweigh the 13 billion, because that way you start saying to people our tax rates are effective, they are efficient, and they are affordable. Come and establish in Nigeria.
And of course, to round off the year, your darling program, Tax Matters, got endorsement from a veritable source, the CITN. Tax Matters was given the 2020 Merit Award in the media category, along with the Punch newspaper. This is the 5th time the CITN would be honoring Tax Matters, and it was indeed a good way to wrap up the year. 2021 is here. It gladdens our hearts, and once again, We wish you the best in your business and in your personal life. Once again, a very happy new year. Thank you for watching.